Welcome to This Explainer. Okay, let's jump right into it, because today we are diving into the core mystery of gold's enduring value. And honestly, we're looking at it through the lens of a really compelling financial paradox. Humanity has evolved in almost every conceivable way, yet we are still completely, utterly fixated on a shiny yellow metal. Today, we're going to examine exactly why that is, and more importantly, we're going to look closely at the true return on investment, the ROI, behind the strategy in a modern world.
Right. I want you to picture this. Just imagine a doomsday scenario. Tomorrow morning, you wake up and every stock exchange in the entire world has completely shut down. The banks, they've stopped working. The internet just vanishes. The paper currency sitting in your wallet is rapidly losing value, and global markets are in a state of sheer, unadulterated panic. Every single modern financial system you rely on completely shuts down overnight.
It forces a really profound question, doesn't it? What would people actually trust? When paper money and digital deposits become totally inaccessible, what is the one asset that has survived every single empire, every war, and every major financial crisis for over 5,000 years? Look, empires have risen and fallen, thousands of massive companies have gone bankrupt, but gold remains.
Section 1. The Ultimate Financial Paradox.
Let's unpack this incredible contradiction of why humanity just absolutely refuses to move on from this simple metal. Unlike modern stocks or bonds, gold offers absolutely zero traditional yield. It doesn't pay dividends, it doesn't generate corporate profits. It earns exactly zero interest just sitting there in a vault. And, well, practically speaking, you literally can't eat it. But here's the paradox. Despite having a zero-yield profile in the traditional sense, holding this zero-yield asset is actually a very deliberate, calculated strategy. Countries store thousands of tons of it, central banks hoard it, and families pass it down.
Section 2. Before money existed.
To really understand the ROI behind this strategy, we have to trace human trust. Thousands of years ago, we relied on barter systems, right? Trading rice for wheat, milk for cloth. But that had severe limitations. What if the other guy didn't want what you had? Civilizations desperately needed a universal standard. So kings began minting gold coins, creating wealth that was recognized across entire continents. Fast forward to the 1800s, and we see the gold standard, where paper money was only trusted because you could literally exchange it for physical gold. And finally, today, even though we've moved off that standard for economic flexibility, gold sits right there as a massive global reserve asset.
But why this specific metal? Ancient civilizations didn't just choose it randomly. It perfectly solved the massive flaws of the barter system because of some very specific physical properties. First, it's exceptionally rare. It's incredibly beautiful to look at, it's super easy to divide and carry around, and crucially, this is the big one, it never rusts or degrades, like ever. Long before banks even existed, gold was already universally trusted.
Section 3. The Scarcity Principle.
Fast forward to today, and gold's power, and really the fundamental ROI behind the strategy, still relies entirely on its extreme physical scarcity compared to our modern financial assets. Think about modern fiat money for a second. Governments can print it overnight. Banks, they create digital deposits instantly just by issuing a loan. A company can issue more shares essentially out of thin air. But physical gold cannot be created overnight. Every single gram must be manually mined, extracted, refined, and transported. Global production only increases very, very gradually each year. And that intense physical extraction is exactly why it serves as such a powerful, long-term strategic store of value.
Section 4. The Central Bank Hedge.
So if it's just a scarce rock that pays no traditional dividends, why on earth are the world's most powerful financial institutions so obsessed with it? Well, here is a fascinating reality. Central banks are actually the largest global purchasers of gold today. Even though countries abandoned the gold standard years ago to gain more flexibility in managing their economies, these very same central banks, ironically, remain the most aggressive buyers of this asset.
The crucial question is why. For central banks, the ROI strategy isn't about generating cash flow at all. It's about holding an internationally recognized asset that acts as absolute crisis insurance. Gold completely diversifies national currency reserves. It is not issued or controlled by any single country, meaning it literally holds zero counterparty risk. It acts as an incredibly powerful hedge during periods of financial stress, and it provides immense stability whenever global uncertainty rises. Investors and institutions purposefully execute this strategy when things start getting shaky.
Section 5. India's cultural vault.
But you know, this trust isn't strictly institutional. In nations like India, gold represents a deep, emotional bond. It's so much more than just jewelry. It's a traditional gift passed across generations. It's a universal symbol of prosperity. But financially speaking, it is a highly liquid emergency savings asset. Families use this cultural approach as a highly effective generational ROI strategy to preserve their purchasing power and wealth completely outside of the traditional banking system. And let me tell you, this cultural trust is a massive driver of global demand.
Section 6. Redefining gold's true ROI.
All right, this brings us to the absolute core of our explainer. When we evaluate this strategy in a modern portfolio, we are essentially weighing its strengths against its limitations. You trade the income generation of modern assets, because remember, gold generates absolutely zero dividends or interest. You trade that for long-term security. Its strengths lie in portfolio diversification, historically preserving purchasing power, and acting as a systemic crisis hedge. But it definitely has limitations. Its price can fluctuate based on market sentiment, and its effectiveness depends heavily on your individual time horizon, your risk tolerance, and your specific goals.
So, what does this all actually mean for us? Is gold essentially a steadfast bridge? Well, yes. Looking at the data, it acts as a steadfast bridge, perfectly connecting the ancient bartering world of merchants with today's incredibly complex digital economies. Technology has changed, money has changed, entire empires have changed. But human trust in gold as a strategic financial anchor, that has remained remarkably consistent.
So, the next time you see a piece of gold jewelry, or just a simple gold coin, I want you to remember this profound reality about its endurance. You aren't just looking at a shiny piece of metal. You're looking at an asset that has outlived kingdoms, currencies, and countless financial crises. It truly represents the ultimate ROI of trust.
I want to leave you with this final thought to ponder. If gold has maintained its value and survived as a core strategy for over 5,000 years, what does that really tell us about the future of the paper money and digital deposits we rely on so heavily today? Thank you so much for joining me for this explainer, and I hope this gives you a completely new perspective on exactly why gold still matters.